Folks, welcome back to MTG Live Trades 2025 Mentorship. This is the lecture number 8. Well, today I took a trade, and I didn't took the trade on the US 100 as usual. I took the trade on the German 14 on the DAX because, well, I can explain it to you guys. You can see here on the forexfactory.com that today we had no news for the US dollar. So here we can see Monday there's no news today. So I switched to the euro, and we can see that we had high impact news drivers. So today is the German CPI and it goes all day long. So there's a lot of volatility in the market on the DAX market, on the German market, on the euro. So this is why I took a trade on the on the DAX today, and I can show to you guys the trade. I recorded the trade live, and I will post the trade on this YouTube channel. It would be, I think I will post it as lecture number 9. So just for you guys to know, and as I said, I will talk about the trade in fully in the next lecture, and I'm gonna also post it. I traded the London session because, you know, for the German market, for the DE40, the London session is usually very volatile, and the New York session is not that volatile. So the main session for the Euro markets are the London sessions and not the New York PM or AM sessions. Okay, so I took the trade, entered the market right here at this point, somewhere here. I took the trade here. I entered the market, and then I get out of the market right here. Okay, it was a huge trade. Let me show it to you guys. So right there, it was a huge trade, and I took actually 2 trades. The first trade you can see here, it was a loss, and the second trade was a winning trade. And I didn't panic to re-enter the market, and because I had a narrative, and I'll also talk about all of that and the details of that trade and the next lecture 9. So all of that will be in the next episode. So today there is no news for the US dollar. No news calendar here. You can see it. Monday. No, this is for euro. Let me switch to US dollar. So we can see here today there are no news, but as you guys can see here, market traded lower, so this is a valid displacement for me. So this is why I maybe take a trade, but I'm not 100% sure. So I'm just considering taking a trade today, but I think it would be better if I don't take a trade, because today is Monday and there's also no news in the market. So it's a tricky situation, but because I want to look cool in front of you guys and show you that I'm better, I want to take a trade. No, I'm just kidding. I just want to, I want to teach you guys something here. So this is why I will try to take a trade if there is a setup at all. Not promising a trade, but if there is a setup, then I'm gonna take it, and you guys can enjoy the trade and learn from it. So this is the London low, as usual. This is the London high, right there. And at this point, let's go to a lower time frame, to the 1-minute chart, and see if we can get anything here. Alright, well, it seems like price is really bearish. It respects this fair value gap here. And also important to mention here that we had a opening range gap higher. So the opening range gap is actually higher. We closed right here yesterday. Let me show it to you guys. So here was the close. So today is actually Monday, so the new week opening gap is right here. We had a huge gap in opening range gap to the upside. So, and this is this new week's opening gap. You can see here price traded to it a little bit and then started to trade lower. I can already tell you guys that it's the same story. This week is gonna be pretty bearish, or the second scenario, this week is gonna be very bullish, because today is Monday, and we know the characteristics from Monday. So it's the manipulation phase for the weekly candle. That's why it's trading lower, and it's leaving this gap open. And Tuesday, tomorrow, will be the same story, and we'll do this manipulation. And on Wednesday, we will see the actual move and the actual distribution. But until then, let's not think too much and just see what the market is gonna do. So here's the 9:30 opening. It's the opening range. Let me mark out the first presented fair value gap. So I'm not gonna take this one as the first presented fair value gap, because the 9:30 candle, we ignore that and we don't take that as a fair value gap. So from here, this is the start. So from that candle to this candle, this is the first presented fair value gap. I mark this out, and we use that as our first presented fair value gap opening range. Okay. I know it seems kind of, yeah, I would say kind of confusing, but just stick with me here for a while, and you will see eventually that it makes total sense and it's really easy to understand. So, and again, let me go back for a second. Here is the trade. You can see it, guys. The consequent encouragement of this week. So we are on the German 40, right? This is the DAX. This is not the US 100. Don't be confused. So here we are in the US 100. I go back. Here's the German 14. Okay. It was at the consequent encouragement of this new week opening gap. But there are also a lot of other factors why I thought the price will go lower. For example, the 15-minute chart, we can see the midnight open, but I'll also talk about it in the next lecture, so don't worry at all. So here's the midnight open. We can see the price traded above it right here, and that was enough for me to consider that as a manipulation, because price is really heavily bearish. And as price traded higher to the bearish order block, the 15-minute bearish order block, I consider that as an as an institutional movement. So that was all. But as I said, I'll talk about. Alright guys, so let's see what the market is gonna do. All we can do right now is wait and absorb the price action and see what the price is gonna do. So right here, this is the up close candle. So this is these two consecutive up close candles. These are the last two up close candles before this downside move, so before this bearish move. So we are gonna consider that as a order block. So, or I am gonna consider that as an order block. And very important, very important, this is why I always talk about the element of time. I'm sure that maybe a lot of you noticed, but a lot of you also didn't give attention to this fact that we are inside the London close macro. So we know what price is gonna do during the macro. So I'm waiting for price to take out this buy-side liquidity and then eventually go inside of it. So we're inside of this fair value gap again, and we're still inside of the macro. So here we have the first sweep of liquidity. So this is the first liquidity is taken. This is why at this point I don't know if price should or must go all the way higher to take this out, but it would be the perfect scenario for me if it does that. So it would be easier for me to trust the price action and take the trade. So that would be easier for me if price goes up and takes this one out. But as I said before, that doesn't mean just because I want to see the price to do that, it doesn't mean that price will 100% do that. This is just what I wanna see price do. So if it starts to trade lower and it gives me a displacement, that would be also enough for me, because the first buy-side liquidity is taken, so liquidity is swept. Now the retail traders, they think that price is going higher, so they start to buy. Where they put their stop losses? Right below this low. So this is what I'm gonna aim for, right? At this point, I just wait and I absorb a price action. I'm pretty much interested in what price is gonna do. So Let's just wait and see. So right here we can see that the buy side is taken. Alright, this is a good sign. So far so good. And I'm just waiting and absorbing price action. And I'm being very, rational about the price action. I'm not in a hurry, or I don't want to force myself to take any trades. I'm very rational about the price action. I only want to take rational trades, and also A+ setup trades. So I'm not gonna promise you again that I will take a trade today 100%, but I will try if the setup is there. So let's just wait and absorb what the price action is gonna do. And this is also another very important factor that a lot of traders nowadays ignore completely. Tape reading is very important. Even if I don't take a trade today, alone that I'm here and I'm absorbing price action and I'm tape reading the market, what the market is going to do, this is also, this is progress, and this is me improving myself in trading and reading the markets one small step. So by doing that, you will improve yourself. You'll be ahead one small step every time, every single day you sit in front of the charts and absorb the price action. I know it seems pretty cool when I take trades, and you guys think like, how does that motherfucker know that? How can he read the price action by these small details? Well, first of all, that comes by experience. You need a lot of experience, and secondly, you can gain that experience by doing what I just told you guys here, sitting in front of the charts, absorbing price action and tape reading the markets. I know it is 100%, I agree. It is very boring. I also don't want to do that, but this is just part of trading. If you want to make money, then you'll have to go through that shit. So this is part of the journey. No pain, no gain. So let's see what the price is gonna do. At this point, the buy side is taken, so I don't want to see a displacement higher. I want to see a trade lower. So in my mind, this is all retail, right? So the retails think that price is reversing and price is starting to trade higher and go for the buy sides here, and it might do that. I'm not telling that it wouldn't do that, but all in all, the bias today is bearish. So I'm only considering taking a short trade. And if it goes to the buy side and it starts to trade higher, it's fine with me. Then it will move along without me. So also very important to notice here, we are above the 50% level from this price leg. 1 minute, I'll be back. I'm sorry, it was my little brother ringing on the door. He came back from school. So yeah, I was just telling you guys about the importance of knowing premium and discount. So at this point, price traded above the 50% level of this price leg. It also traded to the consequent encouragement of the first presented fair value gap opening range. And we are also, another important factor, we are inside of the macro. So very important, don't forget that. The element of time is, price action is number 1, element of time is number 2. So there is no price delivery without without the element of time, and there is no time without the price delivery. So very important to remember that. So here, this is the interval. So this is the time frame that we're inside right now. This is the New York close macro. Okay, here you can see it 9:50 a.m. to 10:10 a.m. right? And also we are right now trading above the 50% level of this price leg. Another important factor, you can see here price is consolidating. So this is, in my mind, smart money, accumulating their positions. So excuse me. As I said before, I only want to take a rational trade. I'm very patient about it. If it does give me the setup today, it would be perfect, and I will take the trade. And if it doesn't, then it's also fine with me. Then there will be no trades from me today. And I'm telling you guys, I'm fine with that because I'm already profitable. So you can see I took the trade today, $5,690. So it's fine with me if there is no trade for me today. And also, if I had a losing trade today, it wouldn't, and price didn't give me another trade or another setup, it would be also completely fine with me, because I know if the price didn't deliver tomorrow, if it doesn't deliver today, it will deliver tomorrow. So I know the model works, I trust it, and this is why I'm not worried about missing moves or worrying about losing trades. So it seems like it actually wants to go to the upside, so let's see what it's gonna do. But as I said before, we're still inside of the macro, so don't worry, just wait and absorb and see what the price is gonna do. This price leg, very important. Let me mark that out again. I did it in the previous lecture, but just for the sake of clarity, let me do it one more time. So this is the premium, and from here to the 0 level, this is the discount. Okay, very important for you guys to understand. So that's it. So I'm waiting for price. At that point, I'm pretty much interested in what price is gonna do. And also, it might go and start to trade higher because we have an opening range gap lower, a huge opening gap lower. So we might just start to trade higher and take these highs out, the initial highs, before they push price lower. So I'm just waiting, and I want to see what price is gonna do. At this point, right now, I want to see how price is gonna react to this small fair value gap here, this buy side and balance side inefficiency. I want to see price actually close below it, and then give me a breaker here, and then eventually start to retrace or retrade to that fair value gap, to this buy side and balance side inefficiency, and then eventually use it as an inversion and start to trade lower and eventually take these lows here out. And spoiler alert, guys, the trade that I'm gonna post maybe tomorrow, or I don't know, on the weekend, the Lecture.8, Lecture.9, sorry, the trade on the German 40, it would be, I recorded it on my phone. So I know you guys hate that because it's a very small screen, and I hate it myself. I swear to God, I don't like it as well, but we're all humans, so I also have a personal life. I wasn't home at that time, and that's why I had to trade record the trade on my phone. But I think you guys can read the price action also on my phone. I know it's a little bit harder because the screen is smaller and you can't see so many 1 minute candles as you can see on a big screen on like in my computer right now. But I think it's still possible to read the price action and have a pretty good understanding of it. So yeah, just a small spoiler alert that you guys don't hate me for that. I'm really sorry. I'm truly sorry. I am. But yeah, it is what it is. So alright. go back to the chart. I can see right now that price is pretty much closing above the consequent encouragement of this fair value gap, which I don't like, because if it's really bearish, it should trade below it and then close below it eventually. So it seems like it respects its its 50% level, and it's also trading down to that 1 minute fair value gap here, to that 1 minute bullish order block, which has an imbalance, a displacement with an order block. So this is a valid order block, valid 1 minute bullish order block. So let's see what price is gonna do. And very important to say that at this point, guys, that I don't believe in all that bullshit that people post on social media, like pushing your edge, push your edge, bro, push your edge, bro. You have to push your edge 100% all the time, bro. This is all garbage. This is absolutely bullshit, Of course, I could risk more than I can and push my edge, as they say, and start to trade 1,000 lots here and then aim for this buy side liquidity, and then risk $15,000 on the trade. But this is not trading. This is gambling in my eyes. And as a smart money trader and as a profitable trader, you also need to understand that I'm not telling that there are not traders out there that trade every single day and they are not profitable. Of course, there are a lot of traders who trade every single day without any exceptions, and they're very profitable. But for me personally, for my model, for my style of trading, I've learned that trading every single day will eventually destroy my account, because the setup is not there every single day. Or you guys, we are all humans, so one day you'll maybe have a bad day, or you have a loss, or whatever. You're not doing that well, you're sick, whatever it might be. And then on days like that, I really refuse to take a trade or go to the charts. I might go to the charts and then just absorb the price action, but I wouldn't take a trade, especially a live trade with real money on my live account. I wouldn't do that. I wouldn't risk money, because as I said before, that I've learned that in my experience, when I do that, I always have more losing trades than winning trades. So very important here to understand that you don't have to trade every single day. If your model is not there, then just don't trade. Step to the sideline, watch the price, absorb it, tape read it, and that will be it. You gain more experience for free, be happy, and that's it. Okay? This is the kind of mindset that a profitable trader, a smart trader should have. Okay? Good. So at this point, price is still trading higher. It seems like it respected this fair value gap, and it also respected this 1 minute order block. It seems like to go higher, and we are no longer inside of the macro. So now, yeah, we're still inside the macro. So this is the last candle of the macro. Let's see what price is gonna do. So it seems like it wants to go higher and doesn't want to give us the sit up. And also very important, guys, to remember that we are inside of the London close, so 10 to 11 a.m. right, which also means that this time there's gonna be a small counter trend to the day, because as the name tells you already, it's the London close, right? So if you're smart, you know what I mean by that. So this is London close, and because of that, we know the price might do a retracement, but seems like the macro wants to push price higher. But I'm just waiting and absorbing price action. I'm not taking any trades because my setup is not there yet, and it's not giving me what I want to see. And very important also, we are still below the midnight open. Right here is the midnight open. Okay, so here is the midnight open. We are below the midnight open. We are right here, right there, and I've noticed that I didn't mark out the A30 opening. So I had the A30 opening price in my mind, but I just noticed that I didn't mark it out. So let me just do that for you guys, so there is no confusion. So here's the A30 opening. There you go. Now you have it. Okay, this is the A30 opening, and we're below the midnight open and below the A30 opening. So it might even still a little bit trade a little bit higher to the A30 opening. So it might go up to that level, or trade inside of this volume imbalance, or trade up to this order block, this 1 minute order block, or this breaker block, and then eventually start to trade lower, or it might just do it right now. So let's see what price is gonna do. So perfect, it closed below the below the inversion fair value gap, so I'm gonna take a trade here. I know it's scary what I'm doing right now, and if you will get it, you'll get what I'm doing right now here if you have enough experience. So close below it. Yep, I'm taking that trade. So this is the short entry for me, and my stop loss is right here, okay, at this high. So you might ask yourself, why is your stop loss above there? So here's the up close candle. This is a 1 minute order block, actually 2 up close candles. So let me mark it out this way. This is an order block for my model, for my trade. So my entry is it sucks right now. It's really fucked up, the entry. I should have entered right here, but well, no one is perfect, and I'm not perfect as well. I know it seems like that I'm perfect, but I'm not. So my stop loss is right above the 50% level, the constant encouragement. Okay. And also, another important factor for this trade and for my entry is this small fair value gap, this CB. So you can see price closed below it right here. On that candle, price closed below it. So that was enough for me to know that price is going to go lower, because I understand narrative, I understand price action, and I through my experiences as a trader, I know that price is going to go lower at this point, because the macro is closed 9:50 to 10:10 a.m. and this is why smart money is going to go and aim for the liquidity, the sell stops, which are right below this low, and here they're going to aim for them and take them eventually out of the market. So at this point, let's just wait and see what price is going to do. Now, I know for a lot of you guys who don't have that much experience, that looks really scary what price is doing right here, but for me, because I have a narrative and because I'm following my model, I don't care about it at all. So if it goes against me and it hits my stop loss, I'm fine with that. I'm still profitable. I'm still 4% up on the account, because I'm only risking 1.4% of the entire account, and I'm aiming for 4% in return, actually 5% in return. So that would be a great trade if it pays out. And if it doesn't, it's still fine with me, because as I said before, I have a narrative and I understand price action. So this is why that trade higher, again, it doesn't look really scary to me, because I know that price eventually is going to go lower, and if it doesn't, it's still fine with me, because I have a narrative, I have a model, I'm following the model, and it's fine with me if it doesn't pay out, because I know the next trade, if this trade is not profitable, then the next one is going to be profitable. And I know this is a G mindset. This is a mindset of confidence and very strong and all of that, and you'll only get this mindset, what I have right now, you'll only get that mindset by experience. If you don't have really much experience, then you'll not get that confidence in yourself and in your model. So this is why you have to sit in front of the charts every single day throughout your learning days. You have to sit in front of the charts, absorb the price action, absorb what price is doing, tape read it, and then eventually you're gonna trust your model. So I know a lot of you guys also, you're thinking right now, why am I not aiming for this sell side liquidity right here? Why am I not aiming for that, for this sell side liquidity, and why am I aiming a little bit more than the sell side liquidity? Well, you can see here, this is 18,786, and the sell side liquidity is on 18,790. Okay, so this is only about 4 points or 4 handles, so this is not a lot for a for a market where it's very volatile like today. Even though there are no news in the market, it's still very volatile. Okay, and this is why I took the trade. If I if price was very choppy and very rangy like it was today morning during the London session, if it was like that all day long, I wouldn't take that trade. But because I understand narrative and price, gave me that displacement, a big range with a lot of fair value gaps, so it's a big range. It shows volatility and the range is big. That's why I took the trade and trusted myself to take this trade. And also very important to mention here that the seasonal tendency is bearish, the higher time frame is bearish, so everything is right now screaming for bearishness. You can see here that price is bearish, so we're inside of this order block. You can see price, we're right now at the consequent encouragement of it. So a lot of retail traders think that this weekly order block is valid, but in my mind it is not, because it's already traded to way lower than the consequent encouragement of it. This is why I'm not taking this order block as a valid order block. And then, as I said before, we go to the 4-hour chart, and we can see we have also here the sell side liquidity that price is gonna go for. So this is the aim for today's trade. Eventually, this is gonna be, these two relative equal lows. These are the aim for the pool. These are the pool. These relative equal lows are the pool of liquidity for my trade. Let's put it that way. And by saying that, I don't mean that I am gonna aim for the exact relative equal lows and the exact price level. By a pool of liquidity, I just mean that it's like a magnet. I want to see price go towards that level, and it doesn't mean that it has to go to that level, but just going in the direction of that level would be enough for me to be profitable and take profitable trades. So at this point, I'm gonna move the stop loss to the high of this 1 minute order block right here. This is the 1 minute order block that I'm talking about. This the first up close candle before this move down. And at this point I can just wait and absorb the price action, what price is gonna do. Now let me this is the macro, let me write it down just in case you guys are confused. Macro London close. Okay, and let me take this out. This is too much. It distracts me from the actual price action. Let me also take this one out. We don't need it no more. This one can go away too. That one can also go, so just wait. So this is also another important lesson about reclaimed PD arrays, so inversion PD arrays. So this, right here where we can see that this fair value gap, this BISI, buy side imbalance, side inefficiency, failed. So a lot of traders, also smart money traders, not only retail traders, a lot of smart money traders, when they see something like that, they just forget about the fair value gap, they put it away, and then they do something like that. They just, okay, fuck it, it doesn't work. But this is not how I trade. Me personally, when a PD array fails, I am gonna use it as an inversion. So we can see here, and folks, what I'm telling you right now here, I swear to God, this is a money glitch. Okay, so go sit down, learn it, watch this video 1,000 times until you get it, and because once you get it, you can't forget about it. So It's really money glitch. Okay, so here this fair value gap, this buy side and bounce side inefficiency, this gap between these two candles, you can see here that it fails. Okay, it doesn't support the price. I don't like use the terms support and resistance, but let me just use it for this case. Okay, so price fails it, it closed below it. Okay, and then eventually it trades higher to it, and then uses its consequent encouragement, the 50% level of it. We can see it on this candle. Let me put that one away for a second. So it trades up to it, uses its consequent encouragement as a premium PDRA to start to trade lower. And then one more time it trades lower, and then again it starts to trade higher, closes again below the 50% level of it, and then starts to trade lower. So this is the algorithmic delivery. Okay, this is the algorithmic price delivery that you're not gonna get it overnight. It takes a lot of experience, it takes a lot of hard work, but once you get it, trust me, you can't forget about it. Anything else, okay, anything else, what you know, the influencers, a lot of online traders are telling you on social media, you can't take them even serious anymore. You'll laugh about them, you'll just look at their charts and their, you know, their mindset and the way they view the charts, and you will just laugh at them and you view them as a joke because you understand algorithmic price delivery. And I know it looks pretty cool right now. You guys think like I can see the fucking future, because where price started to trade higher, I already told you guys the price is gonna trade higher. And then eventually right here, right at the top, I started to take a short, and I'm aiming for the Sellside Liquidity here. And now I know it seems like it's impossible for you to learn, this is too much, but trust me, if you put in the hard work for, let's say, 3 years, 4 years, eventually you're also gonna get it. So, you know, once you get it, you can forget it. So it's better to make money this way and make a lot of money. Trust me, there's no limit. The sky is the limit once you get it. Then, you know, going to your 9 to 5 and listening to your boss like a bitch and do everything that your boss is telling you. And, you know, in the beginning, it's okay to go to work, to be a hard-working man, you know, make money, gain capital. And as soon as you have capital, just get out of the system, you know, understand trading, understand the game, and then get out of it. And, you know, it's better for you guys to understand it now, because the game is getting harder and harder and more complicated every single day. So don't think like it's getting easier, because I promise you it's not getting easier. It's only getting harder and more complicated. So right now is the best chance for you guys to understand it and, you know, just have it in your back. It's a skill set for life. So once you learn it, you have it forever. It's like riding motorcycle or riding a bike. You know, you can't forget it. So put in the hard work and eventually you'll get it. At this point, I hope you guys found this lecture insightful. I have to go, but I'll let my screen on so you guys will see the trade, how it ends. And yeah, I hope you guys found this lecture insightful, and till talk to you next time, be safe guys. Bye bye.